Hello and welcome back to Current Economy and Investment Insights. My name is Paul Munichol and I'm a financial advisor with Ameriprise Financial in Orland Park. Ron Jankowski is off today, and because of Monday's holiday, we are filming today on Wednesday, October 13th for today's show. So let's go ahead and begin. I'm going to start out today's show by going over the third quarter's market recap. I'm going to talk to you a little bit about the election, and then at the second show, we're going to talk today about Medicare. So let's begin. Equities delivered a second quarter of strong gains following their March drawdown. While fixed income and alternatives delivered more modest returns, U.S. equities led the way in the third quarter, posting strong gains in July and August on better than expected earnings results and optimism regarding a U.S. economic recovery. September was a modest pullback as concerns over a coronavirus resurgence and election uncertainties were a drag on stock prices. Still, indices generally ended the 3-month period well ahead. International equities delivered modestly lower returns than their domestic counterparts, driven by a divergence in regional results. Asian markets delivered strong gains benefiting from China's apparent rapid economic recovery, while European equity markets, particularly in the UK, lagged other regions. Fixed income markets delivered modest returns as Treasury yields remained relatively stable at historically low levels throughout the third quarter, while credit-sensitive bond sectors such as high yield rallied along with equity markets during the quarter. More interest rate-sensitive bonds like government bonds remained mostly flat during the period. In just 6 months, the U.S. equities, as measured by the Russell 3000 index, have recovered from their sharp virus-inspired correction in March and ended quarter three solidly in positive territory on the year. While we believe markets could be volatile in the near term, we also see room for further upside in certain cyclical areas of the market as the economy continues to recover. As such, we believe investors should remain focused on fundamentals and committed to diversified portfolios. I want to make a brief comment on the election. As we all know, unless our heads are in the sand, we are in a presidential election cycle coming soon. So I've got just a quick comment on that. One could argue that the U.S. has rarely been more politically divided as a country than where it stands today. And while Democrats and Republicans offer starkly different views on how to lead the country going forward, investors should be able to separate rhetoric from potential policy. Understanding the range of potential election outcomes may help lower pre-election anxiety and place investors in a better position of dealing with the election's ultimate results. While the political composition of the federal government could undoubtedly play a role in tilting market dynamics longer term, we do not believe November's election results would alter near-term drivers dramatically or materially. Corporate profits and their growth profile, as well as interest rate policy, are traditionally the most significant drivers of stock prices. Of course, virus trends and treatments and the economy's ability to continue its rebound are presently particularly prominent in influencing the market's direction. Notably, the final weeks of a presidential election cycle often increase investor anxiety and market volatility. This year, that volatility could extend past November 3rd, especially if the results are delayed. However, investors should remain confident that their diversified portfolios can help to weather potential storms and keep them on track towards their long-term goals. Finally, we believe maintaining a pragmatic view of the political environment, following a well-diversified investment strategy and staying focused on goals are investors' best defense against managing through the uncertainty of the pending election cycle. At this point in the show, Ron will usually give you a brief update on what's happening right now in the markets, meaning today. So I'm going to go ahead and do that. This is Wednesday morning again. S&P futures are flat after the index snapped a 4-day win streak with a 0.6% decline yesterday on Tuesday. Stocks in Europe are lower, but they're off their worst levels as strength among bank stocks help to offset weakness in the travel and leisure industry. And some of those bank stocks to report on, Bank of America beat EPS estimates although revenue was slightly below the consensus estimate. And Goldman earned $9.68 per share for the third quarter. That was well above the consensus estimate of $5.57. Just year-to-date numbers, all three major indices are positive on the year at this point. S&P 500 is positive 10.3%. The Dow Jones year-to-date positive 2.3%. And the NASDAQ continues to be an outperformer. NASDAQ is positive 33.2%. Those are all year-to-date numbers through yesterday's market close. That's going to go ahead and conclude the first half of today's show. We're going to take a brief break, and I will be right back. We're going to talk about Medicare in the second half of the show, so stay with us. All right, thanks for staying with us, and welcome back to the Your Money portion of our show. And today we're going to talk about Medicare and the open enrollment period that is about to roll around again. So let's begin. At this time of year, current Medicare beneficiaries have the option to make changes in their coverage. They're able to do so during the open enrollment period. If you're enrolled in Medicare, this is an opportunity for you to make adjustments to your plan that will take effect next year beginning January 2021. It makes sense for you to review your coverage annually. Check the annual notice of coverage change that you should have received from Medicare Advantage and prescription drug plan providers. Be sure you understand how the adjustments for 2021 could affect your coverage or costs. Changes may impact premiums, deductibles, drug costs, and provider or pharmacy networks. At the same time, consider your own situation. Have you experienced changes in your health that may affect your medical needs? Do you now take prescription drugs that may not be as effectively covered under your current drug plan? If you answer yes to either of these questions, you want to explore other options during the open enrollment period. So let's go over some options to consider. During this special enrollment period, you do have flexibility to make meaningful changes in your coverage. So here's a few things to consider. One, maybe consider moving from original Medicare Parts A and B to Medicare Supplement or Medigap plan to take Medicare Advantage. Private insurance companies offer Medicare Advantage plans. They are designed to cover costs picked up by Parts A and B and your supplement plan. Premiums can be more attractive, but pay attention to your out-of-pocket costs and how that will impact you. Advantage plans may also provide dental and vision coverage, something that's not typically included in more traditional coverage. And again, you'll always want to confirm this with your insurance provider and Medicare directly. But another option is moving from Medicare Advantage to traditional Medicare. If you are interested in moving from Medicare Advantage to traditional Medicare, you may be able to do so. If you are in a one-year trial period with Medicare Advantage, you are allowed to switch to traditional Medicare and a supplement plan at this time. If you're outside that window, your ability to pick up Medigap policy may depend on laws in your state. If underwriting is required to enroll in a Medigap plan, issuance is not guaranteed. Another option to consider is switching Medicare Advantage plans. If you have complete flexibility to move from one Medicare Advantage to another during this period, you may want to make sure that your preferred medical providers are part of the network in a different plan if you are looking to switch. Another option to consider is enroll or change your Part D prescription drug coverage. The open enrollment period is a time to compare drug plans to see if you can find better coverage that is more cost efficient to you. It's also an opportunity to enroll in Part D coverage if you don't have it, or drop coverage if you think you aren't getting much benefit from it. Be aware, however, that if you drop coverage, you must wait until the open enrollment period next year to join again. A late enrollment penalty may apply. Finally, help is available. I am not the Medicare help expert. To get help, you can find plenty of help through Medicare.gov, but there's a lot to sort through, so you may want to work with an insurance professional who specializes in Medicare coverage. Again, I will not be able to help you with Medicare coverage, but the insurance professional can, or the Medicare.gov website. As always, your financial advisor, that's something I can help you with, can help you with the money decisions revolving around how it might fit your budget if you change plans. And if you're working with a financial advisor, talk to them on the financial end of any decisions you might make. If you don't have one or you're looking to work with someone new, feel free to give me a call directly at 708-226-3412. Again, I can't really help you with the Medicare decisions, but I can help you with the financial decisions that might go along with it. So that's going to go ahead and conclude today's show. Thanks for staying with us, and we will be with you next week with a new set of topics. So have a great week, and we'll see you again next week. Thanks.